2018 was an interesting year. We had a lot of capital coming into the market looking for yield. We have rates still quite low. We have supply still also relatively low, and we're looking for opportunities. And the challenge was finding those opportunities across Western Europe.
There have been signs of positivity in the market, particularly leasing activity in central London to major international tech tenants. And also there have been very large investment purchases in central London, mainly from Asian investors.
Industrial has continued to perform. I think city centre offices have come to the fore. There's been very good tenant demand. There's been a trend for income and security of income, but also investors have looked at the alternative sectors, and I put into that the build to rent, and I expect that to continue over the next 12 months.
We've seen the small business sector, the SME economy, if you like, go from strength to strength.
The major challenge, I think, for the economy has been related to Brexit, in that we've taken our eyes off some very important areas, such as productivity.
Well, the key challenge has been the obvious geopolitical headwinds and the bickering at Westminster and Brussels, which has definitely caused a significant amount of concern amongst international investors into the UK marketplace.
There have been a number of casualties in the high street, and the challenge is that we're all a lot more comfortable buying online.
Uncertainty's been, I would say, more in London than, say, out in the regions. The regions are ready to get on with it.
Big challenge, the big effort for us in 18 was how do we get the right employees and how do we keep them motivated?
Well, I think it's an interesting market in that we have a lot of capital that's been chasing yielding stable assets. So our goal was to try to stabilize our positions as fast as possible. And once we sort of create that value, then sell them onto this market hungry for yield.
Our hopes and expectations, in fact, for 2019 are fairly bullish, almost irrespective of what happens to Brexit.
We've invested in pockets of exceptional growth, particularly in central London, and that has proven a very resilient strategy.
Well, I think in times of uncertainty, and we're certainly living through uncertain times at this moment in time, nationally and internationally, one focuses on core. The focus that we've had on gateway cities over the course of the last few years has served us well. With our recent acquisition in Los Angeles, we're looking at opportunities in New York and in Boston, and obviously our strong holdings in London give us a resilience and a backdrop that we're happy and comfortable with.
Yeah, the currency will be important because obviously with the value of the pounds, it will be attractive to overseas investors. And also the UK funds have got monies. Again, they're a watching brief, not doing much on the larger lot sizes.
We will see an increasing interest in more alternative asset classes and more complex asset management properties in the regions as investors demand more return.
I see the main opportunity is in that SME growth. Actually, the SMEs have wanted, desired, demanded, if you like, flexible space for the last umpteen years, and that's the market that we play in.
Our approach to finding value is really bifurcated. We have the large corporate complicated transactions where we buy into companies that we think are very interesting and we believe have attractive assets. And separately, we buy into thematic programs where we buy individual little assets. So we still like healthcare. We happen to like Spain. There are certain markets, regions, and products that we really like.
Small businesses have always demanded flexibility. I think larger businesses are now starting to realise that actually, in terms of their portfolio strategy, they need flexible space. So the whole market is changing from that perspective.
We've had exponential growth in the last 2 years in the build-to-rent sector. I see that continuing to play out through 2019 with a good pipeline coming forward and approximately 20,000 homes close to completion and delivery during the course of next year. The private sector must now think about delivering an affordable model for the build-to-rent sector.
The PRS market, the affordable market, is going to take far more momentum with local authorities.
In 2019, the hotel and the hospitality market, particularly in the segment that Cycas operates in, which is the service department or all-stay, extended stay hotels, is really caught on fire in the last couple of years. That segment has really been recognized by developers, by investors, by bankers, and indeed by customers. And so that growth, that momentum that we started to see in 18 is really picking up pace in 19. And it's a challenge for us to capitalize on all that growth.
I hope there'll be less negativity around retail. Shoppers will continue to visit well-located, well-defined, convenient centres that have a wide range of offer and are affordable for retailers to operate in.
I think on an international scale, one is hoping that this veering towards populism and this focusing on national interests rather than an international approach would move towards the collective rather than the individual. So the biggest danger I think we have in Britain is some form of social explosion as a result of the irresponsibility of our political class.
The single biggest risk, let's say, in terms of the European story isn't really purely central bank, but it's more political uncertainty in the UK and in Italy, and how that spill over, if any, into the rest of Europe.
The key challenge for 2019 is the geopolitical headwinds ahead of us, the continuing demise of the retail markets and the potential impact on consumer confidence of that, and the further demise of town centres as a result.
A lot of it has centred around the B word, but the business has been remarkably resilient to it.
Depending on how Brexit happens, will have a big impact on our ability to employ people and get enough people and get the right kind of people. That's a big challenge for the whole of the hospitality industry, and we're no exception.
Will capital change its perspective? Well, there's a big fear of what they call end of cycle, or and where is that coming from? In our view, it's really emanating, of course, from the US and to some degree with China slowing. So the real risk is, how does that develop in terms of the European context? We still think we have at least another year or 2 years away before we start really beginning to feel the rise of interest rates in the US and how they impact these markets.
My hope for the UK economy in 2019 is that the government refocuses its efforts and its attention onto building productivity levels in this country.
My hope for the economy is that Brexit doesn't cause too much of a break on the economy.
So my hope for 2019 is threefold. First of all, that the Brexit impact is as limited as possible. Second of all, that the residential values that we've seen declining in central London are not spreading to the domestic market. And third of all, that the battle between China and the US about trade agreements is not impacting the UK, continental Europe, in any shape or form.
But my hope in 2019 is that London's inherent strength as the most relevant labour market in or out of Europe will continue.
If we have a good Brexit and things are steady and we establish a relationship with the European Union, the pound is likely to be stable, which means that we'll go on earning the high returns that we make from our Polish assets. I don't think interest rates in the United Kingdom are going to go up much, if they go up at all.
The first resolution would be that we need to stay vigilant. We need to limit our exposure, our risk in this turbulent year. Second of all, we need to bet on innovation. Innovation on 3D modulars, innovation in connected buildings. And the third aspect I would raise in terms of resolution is that we want to work more and more with the public sector and helping them to address the affordability gap in the housing sector.
To talk about the regions and actually get people to understand and buy into the fact that the regions are the future of the country.
Employee satisfaction, employees having fun, because it translates into our customers, our guests having fun and having a good experience.
We need to remember that property is a long-term business. The key will be to maintain perspective.
Our resolutions for 2019 are to keep a steady ship, not to slip on any banana skins, to allow our assets to produce the income that they produce, and to deploy the rest of the 100 million that we have in the offices fund that needs to be invested.
Well, commercially, we're looking to build the business further. We're looking to grow. We're looking to develop. We've hired a significant number of very capable people.
My New Year's resolution for 2019 is to stop worrying about Brexit and hopefully for Brexit to be resolved so that we can concentrate on growing the business again, attracting new people to the business, have more face-to-face meetings, not email, not telephone, but see people.
Our New Year's resolution at APAM is to ignore the geopolitical headwinds and uncertainty in Westminster and to focus on what we do best, which is delivering investment and asset management solutions to our international and UK investors throughout the UK using our instinct and experience.
I don't necessarily always have one-year resolutions. I have sort of programmed 5-year resolutions. So my resolution of a couple of years ago was to try to help 10 million children. So my New Year resolution for the coming year on the charity side is to continue that theme. The other thing we try to do also is to help those who serve our country and to also providing family support or support to families of veterans as they deal with their own respective injuries.